Imagine you are standing at the grocery store checkout. You have got your cart, your loyalty card, and your budget in your head. The cashier scans the last item, the total comes up, and something just feels off. It is higher than you expected. You know your pension came in. You know you have been careful. But somewhere between what the government sends and what actually lands in your pocket, something changed and nobody told you. That feeling right there, that is exactly what thousands of Canadian seniors are experiencing right now with their OAS and CPP payments, and most of them do not even know why. My name is Joseph, and welcome to Canada Pension Guide, the channel dedicated to making sure you understand every dollar you are entitled to, every deadline that affects you, and every trap that the system has waiting if you are not paying attention. If you are new here, please subscribe right now, because what I am about to share with you today is exactly the kind of information this channel exists to deliver. Because here is what is happening. Right now, in 2026, 3 separate government systems are changing at the same time. CPP, OAS, and GIS, all of them are shifting. And the convergence of those 3 changes is creating a window where Canadian seniors who are not informed could lose money, miss payments, or trigger penalties they cannot undo. So before you scroll past this video, before you tell yourself you will come back to it later, I need you to hear this clearly. There is a hard government deadline coming on April 30th, 2026. If you are a senior who receives OAS, or if your income in 2025 was above a certain threshold, missing that deadline does not just mean a fine. It means Service Canada's automated system can suspend your OAS check entirely, not reduce it. Suspend it. No phone call, no warning letter in advance. The system just stops the payment. And getting it reinstated is a process that can take weeks or longer. I have seen it happen, so the next few minutes of this video could quite literally be worth hundreds of dollars to you or to someone you love. Please stay with me. Now let us get into it. I am going to break this down into 5 specific things every Canadian senior needs to know right now. I call these the 5 collision points because that is exactly what this is. 5 separate rules all colliding at once in 2026, and you need to know where you are standing when they hit. Number 1. The OAS clawback threshold has moved, and it affects you starting July 2026. Here is how this works. The federal government calculates your OAS recovery tax, what many people call the clawback, based on your net world income from the previous tax year. For the payment period running from July 2026 all the way to June 2027, the government is using your 2025 income as the measuring stick. If your net world income for 2025 exceeded $93,454, you may be subject to a recovery tax on your OAS payments. Now here is what most seniors do not realize. That income calculation includes the OAS pension itself. The money the government sends you counts as income that the government then uses to decide how much of that same money to take back. I know that sounds circular, because it is, but it is how the system is designed. So if you are doing your own math and you are not including your OAS in that net income figure, your numbers are wrong, and you may be blindsided when July arrives. Number 2. The April 30th filing deadline is not optional, and it is not the same as your regular tax return. This is the one that catches people most off guard, especially Canadian seniors who live part of the year outside the country, our snowbirds, our retirees in the United States or Portugal or Mexico. There is a specific government document called the Old Age Security Return of Income, or OASRI. If you are a non-resident receiving OAS, this is a separate filing requirement from your standard T1 tax return. The deadline is April 30th, 2026. If it is not filed by that date, Service Canada uses that missing information as grounds to flag your file for payment suspension. The OASRI is what allows the government to determine how much OAS you should continue to receive. Without it, their system has no basis to keep paying you. The form you need is supported by a guide called T4155, available directly on canada.ca. If this applies to you or someone in your family, Write down April 30th right now. Put it in your phone. Set a reminder for mid-April so you have time to act. Number 3. The CPP second earnings ceiling is now real, and it is changing your T4. Starting January 1st, 2026, the year's maximum pensionable earnings, the YAMPE, has risen to $74,600. But there is now a second ceiling sitting above that, called the YAMPE, set at $85,000. Any employment income between $74,600 and $85,000 is now subject to what is called CPP2 contributions. If you are still working, or if your spouse is still working, this affects your household. And here is where the payroll trap comes in. CPP2 contributions are supposed to be reported separately on your T4 in Box 16A. If your employer's payroll system has not been updated correctly, those contributions may be reported in the wrong box, which creates a mismatch when CRA processes your return. CRA's systems are specifically looking at this. A mismatch between Box 16 and Box 16A is an audit flag in 2026. Check your T4 carefully when it arrives. If the numbers do not add up, contact your employer's payroll department before you file. Number 4. Your GIS could be cut in July 2026 because of something you did in 2025. The Guaranteed Income Supplement, GIS, is one of the most important and most underused benefits available to lower-income Canadian seniors. But here is the mechanism that surprises people every single year. GIS is recalculated every July based on your prior year's income. If you had unusual income in 2025, maybe you made a large RRIF withdrawal, sold a property, received a lump sum of any kind, that income is now on the record. And when July 2026 arrives, your GIS could be reduced sharply or eliminated entirely for the entire July 2026 to June 2027 period, even if you are back to your normal low income right now. The good news is there is a protection mechanism available. If your income in 2025 was temporarily high and you have since retired, or your income has dropped, you may be eligible to apply for what is called an estimated income exception. This allows Service Canada to calculate your GIS based on your estimated current year income rather than last year's figures. But you have to apply for it. It does not happen automatically. The form involved is ISP 3025 for GIS applications generally, and if you have experienced a recent income change, contact Service Canada directly to ask about the estimated income option. Number 5. The OAS deferral calculation is being misunderstood, and it may cost you years of income. I want to address something that is spreading online right now. There are websites and social media posts claiming dramatic new rules, OAS, starting at 62, deferral bonuses to age 75, a so-called retirement flexibility and longevity framework. I am telling you directly, none of that is real. None of it appears in any official legislation or on any Canada.ca page. It is fabricated content designed to get clicks, and it is creating real confusion among real seniors. Here is what is actually true. The OAS deferral rules have not changed. If you choose to delay taking your OAS past age 65, you do receive a 0.6% increase for each month you defer, up to a maximum of 36% more at age 70. That is the rule. That has not changed. What I want you to think about carefully is whether deferral is actually the right strategy for your specific situation. If you defer OAS while still earning employment income, and that combined income pushes you above the clawback threshold, you may end up deferring a benefit only to have it partially clawed back anyway once it starts. The decision to defer should be made with a full picture of your projected income, not based on a general rule that sounds good in a headline. Now I want to pause here for just a moment and ask you something simple. Drop a comment below. Just tell me your province and the word truth if this video has already changed something you thought you knew about your pension. Province and truth. I read every single comment on this channel, and your responses help me understand exactly what topics to cover next for this community. So please, take 5 seconds and let me know you are here. Now let us talk about what you actually do with all of this. Because I do not want you leaving this video feeling anxious. I want you leaving with a clear action plan. Think of this as your safety shield. 4 steps to protect everything you are entitled to before the critical deadlines arrive. Step 1. Pull your 2025 net income number before April. Log into your My account on CRA's website or call CRA directly and get a clear picture of your total net world income for 2025. Include your OAS, your CPP, your investment income, any RRIF withdrawals, and any other sources. Know your number before the government calculates it for you. Knowledge is your first defense. Step 2. If you spent any time outside Canada in 2025 or 2026, confirm immediately whether you are required to file the OASRI. Do not assume. Call Service Canada at 1-800-277-9914 and ask them directly whether this requirement applies to you. The deadline is April 30th, and there is no grace period. Step 3. When your T4 arrives this February, look specifically at Box 16 and Box 16A. If you or your spouse had employment income above $74,600 in 2025, there should be entries in both boxes. If the CPP2 amount looks missing or incorrectly combined, flag it with your employer before you file your return. Step 4. If your income in 2025 was higher than usual due to a one-time event, call Service Canada now before July and ask about the estimated income provision for GIS. Do not wait until your July payment is reduced to react. By then, the decision has already been made by the system. That is your shield. 4 steps. Clear, actionable, and entirely within your control. Here is the truth about these pension systems. They are not designed to be easy to navigate. They are built on decades of layered legislation, automated triggers, and bureaucratic timelines that do not slow down for anyone. The government is not going to call you and remind you about April 30th. The system is not going to send you a warning before it suspends your OAS. That is not how it works. That is why this channel exists. That is why I am here every week to be the expert guide standing between you and a system that is perfectly legal, perfectly automated, and completely indifferent to whether you understood the rules or not. If this video gave you something valuable today, a fact, a deadline, a form number, a step you are going to take this week, then I would love for you to become a permanent part of this community. Click subscribe right now and hit that notification bell so you never miss a new video. Every week on Canada Pension Guide, we break down exactly these kinds of updates: CPP, OAS, GIS, CRA deadlines, and everything in between in plain language, with verified official sources, and with your financial security as the only agenda. Share this video with a family member, a friend, or a neighbor who is receiving OAS or CPP right now, because the seniors who are most at risk from these changes are often the ones who are not online looking for this information. You might be the person who gets it to them in time. I am Joseph. Thank you for watching Canada Pension Guide. Stay informed, stay protected, and I will see you in the next one.